The Nigerian exchange has been a hub of activities in recent weeks, with the spotlight firmly on dividends payout. As companies listed on the exchange announced their plans to distribute a portion of their profits to shareholders, investors are closely watching the developments, eager to take position on potential returns. From banking giants to consumer goods, conglomerates, and the exchange has seen a range of dividends announcements, each with its own implications for the market. But let's get talking now. And I'm being joined by an industrial sector analyst. He's with Chapel Hill, Denham. Mr. James Ola-Adisa, thank you so much. It's been a while. It's good to see you on the program.
Thank you for having me.
Yes, like I said in my introduction, the performance of the market in recent times, it's been that same flip-flop that we've seen. But banking stocks always do well. We call them the liquid stocks. I think that's the term you guys use. But the consumer goods sector is telling another story at this time. What is your understanding of all of this, and how will this affect, of course, dividend payouts and all of that?
So overall, the market has been positive. Yesterday, the market has defended over 30%, right, which is definitely positive. I think for the bank, they've enjoyed the benefits of revaluation gains. So as you know, the CBN has directed them to use that to show off their retained earnings and not to use it as dividends, right? But so far this year, it's interesting to find that, the banking index is, one of the indices that we track that is down about 7%. And if you look at the constituents, you see that yesterday, FBNH and Fidelity Bank, are typically the only banks that are closing in the green terrain yesterday. And, we see the negative sentiment in the banking sector as a result of recapitalization exercise which was announced and the capital raises that banks intend to begin, and as a result of that, we expect that, the banking sector will be trading or quite volatile moving forward. For the consumer goods sector, I think, there has been renewed confidence in the sector. Corporate actions from some of these consumer names have renewed positive sentiment for investors, and as such, we've seen that the sector has enjoyed an uptick. So yes, indeed, they've gone through a trying time. They booked significant FX losses, but we've seen that rates are sticky around 1,400 naira to the dollar, and it seems like the worst is behind us in terms of FX depreciation and devaluation. And so the market is expecting normalized earnings moving forward. So I think that the outlook is positive for the consumer goods sector, even though they've suffered some losses over time. And for the banking sector, we expect that to remain volatile. Some investors are speculative on the capital raising exercise, and others just want to wait at the sidelines till the capital raises have been concluded.
Well, I think it's a good way to start our conversation. I'm going to ask you next about reforms by FG. You heard the IMF coming up today to say well-coordinated and well-implemented reforms will definitely give us inclusive growth. But my question to you with this is the aspect of attracting investments. Do you think Nigeria is on the right track? Are we speaking that language that investors want to hear at this time?
Well, the simple answer would be yes. I think we're on the right track, and I'll give context to that. So, when you're attracting investment, I think investors pay attention to two key areas. Right? They look at macro policies and they look at monetary policy. And on the monetary front and on the macro front, I think we've been doing a lot. On the macro front, solid policies have been rolled out. The FX framework and the subsidy removal are definitely positive. And even though the effect of these policies are lagging, we believe that eventually they will begin to bear fruit. Now, on the monetary side, the monetary policymakers have also been very active. They've been engaging investors, ensuring that the transmission mechanism of the monetary policy is effective. And I think that we need what we actually need, are more industry-specific policies, right? And I think that would be what will make the difference. So, the president has rolled out 3 executive orders to attract investment into the oil and gas space. example of what I mean by, an industry-specific policy, right? And that would make the environment much more friendly. But we see that, even the executive orders that have been rolled out have not really, made a world of difference. We still hear that IOCs are divesting from the Nigerian market, but we also hear that they are buying assets in Angola, and that tells us that, we need to do much more. We need to roll out much more favorable policies to make them nest in Nigeria, to make them stay.
But also, let's look at the Debt Management Office is offering FGN bonds. At least there's one valued at 150 billion at the moment. Looks juicy. One thing I've noticed about bonds, whenever they are offered, is oversubscription most times. And many will say that tends to bring back that investors' confidence that is expected. Do you think we're having that confidence as expected at this time? I'm talking about the fallout of this bond being offered by government.
I think we're seeing a good handshake between fiscal guys and the monetary guys. And generally in fixed income markets, I would say that, yields are higher. And this is just a result of the core mandate of the CBN, which is price stability, right? With higher interest rates, the CBN is able to kill two birds with one stone. So on one hand, they offer attractive rates, which attracts foreign portfolio investors. And that in some way helps to stabilize the currency, which means that imported goods and services as well as obligations remain relatively stable. Now, on the second, or the other hand, on the flip side, higher interest rates means that individuals tend to move from consumption to investment, and that will curb in some way any element of demand pulled inflation that we have. I think that with these two factors, the CBN will be able to anchor expectations, and that will build confidence in investors. These high interest rates, as you may know, were part of the factors that Fitch Rating outlined as positive for Nigeria when they upgraded our outlook from stable to positive. And I think that speaks volumes to renewed confidence in the country and the outlook of the country.
The president has continued to visit, of course, countries around, and the message is always clear. Nigeria is open for investment. Even the UK Africa Summit, United States Africa Summit that is also going on, Business Summit, also has Lagos and Nigeria, of course, well represented in all of this. But I want to ask you this before I go to my next question. What sort of conversation do you expect around the table at this time that can help facilitate this trade or this business deals? For me, how does it translate to Naira and Kobo? That is what Nigerians want to hear. So when we have these meetings and all of that, what more should be done? What sort of conversations do we need to continue to have so that this really materializes?
Okay, so on the domestic front, right, I think, but let me start like this. The government's business really is to make the environment friendly for business, right? So if you want people to bring in investment, you want foreign direct investors to come to the country, then really you have to make the environment, you have to enable them within the environment. What I think are some of the conversations we need to be having, around how we're currently treating some of the already or existing foreign direct investors. We have a pipeline of deals in the oil and gas space. Some of them have been there for a while, and we hear that the outlook is positive, but we haven't really heard any concrete news. I think that what to send a strong message to investors that Nigeria is really open for business, would be to see some of these deals, being executed, or we see policies being rolled out that would ensure that this international oil companies stay in Nigeria. They find the environment enabling for business. This would help us to boost our crude oil production, and our macro numbers would definitely look better. So I think that that's a key or a core conversation that we need to be having right now.
Now, let's now stay with companies that have declared profit at this time. Well, for me, I'm seeing more of the banks churning out billions of naira, profit after tax and all of that. despite this economic challenge that we face. Now, what's your understanding of this performance? And let me say, could they have done better considering the present economic situation? High interest rates, high price of energy, diesel, and all of that. What did you think would have happened if things were business as usual?
So, given the reality of the environment, if we look at the bank, really they're enjoying the benefit of the high interest rate environment. The CBN is hiking interest rates to curb inflation, and the banks are definitely benefiting from this environment. I think that real winners for the banking sector, will be banks that are able to leverage this high interest environment to generate stronger or higher yields on assets, on their interest earning assets, and at the same time, they are able to properly manage their cost of funds. Those would be the banks that will win. For the non-banks, I think that operationally, most of them remain fundamentally sound. They posted strong EBITDA numbers, but, FX losses will really beyond their control, and we find that in their results, most of them did very well up until, operating profits. And after that, FX losses eroded their earnings significantly, and that translated to, lackluster performance for profit after tax. So given the realities of the operating environment, I think that, the operating performances were strong, but the impact of the depreciation really affected most of the non-banks, for those that had, significant FX obligations on their books. But I think we need to look beyond that. We need to begin to see that, moving forward, these non-banks are going to, be able to realize normalized earnings, and that would mean that the impact of the FX devaluation and depreciation wouldn't really eat into their earnings, and so we would see renewed sentiment, positive sentiment around the earnings of the non-banks moving forward.
Brilliant stuff. What would you now say is your outlook? Of course, whatever happens in the global space affects us as a country. We still know that we still have issues around Israel Hamas, and of course, Russia and Ukraine crisis. All of this distorted movements and all of that, smooth movement of products all around, raw materials and all of that on the Red Sea and all of this. How do you see this development shaping the outlook of a global market?
So I see, like you rightly mentioned, the Ukraine conflict, as well as the Ukraine-Russia conflict, as well as the Israel-Palestine conflict in the northeast, as significant risk to global growth. I think that this risk will remain, and it will cause global central banks around the world to be reluctant to cut rates, as that would prevent policy somersaults. So they don't want a case where they would cut interest rates, and after a while, because of the risks and the shocks from this global crisis, they would have to begin to hike interest rates again. So I think that foreign flows to emerging markets will remain tepid. But if we bring it home, I think that it should have a somewhat positive impact on crude oil prices, which would help our export earnings. We expect crude oil prices to remain elevated, but I think that we'll see crude oil production remain sticky at around 1.5 million barrels per day. And if we're not able to really ramp up production, we won't be able to enjoy the full benefit of this high prices for crude oil. In addition to that, an extra layer of pressure would possibly come from commodity prices, like you rightly mentioned. That would also remain elevated, and it would possibly have an adverse impact on inflation.
Finally, what will you be telling investors at this time, despite all of these challenges, both home and abroad?
I think that, the government is doing a lot of work to make the environment much more attractive. I think that markets remain very cheap and attractive to foreign investors. If you look at the long-term play, it's clear that Nigeria is a buy. And I think that investors need to be looking at the positives in Nigeria. They need to be looking at the fact that our president is going around selling Nigeria to foreign investors. And at home, we are seeing the fiscal guys, the ministers, doing or putting in effort to make the environment much more friendly. The aviation minister has started talks with foreign airline builders to, supply or lease agreements, what they're trying to negotiate for domestic players. And I think that things like this speak volumes to the length that our leaders are trying to go to, make Nigeria a much more attractive environment for investment. I think that investors need to, buy into the Nigerian story right now.
I think that's a good way to live it. I must thank you so much. Mr. James Ola-Adisa is an industrial sector analyst. He's with Chapel Hill, Denham. Do enjoy your weekend.
Thank you.
And stay safe.
Thank you very much.